All right, hey there, everybody. Christopher Franks with Texas West Capital. It is just after 11 a.m. Central Standard Time here on Friday, the 25th of September, 2020. We got futures expiring already today, just about an hour ago. CME Bitcoin futures. So that may or may not have had a little something to do with the price there. But we'll take a look at what's going on at that price action as well as across the other markets there. Good to have you all checking in. We see we've got data here already. Intelligence is the ability to adapt to change. I would agree with that. Only those who hold steadfastly to their positions when counter evidence is shown. Oh my gosh, excuse me there. Only when you do that does that really kind of put you in danger, guys. It's okay to have an opinion and even to hold it tightly. But when you're holding it tightly in the face of evidence saying otherwise, that's when you kind of really put yourself in a big problem there, in a big issue. So hopefully you guys aren't doing that. Oh my gosh, excuse me here, man. Got these allergies kicking in here. Let me see. Why is it? Okay, there we go. Now we got people showing up here. Hey there, Hank. Good to see you. I'm trying to check and see if we're seeing y'all on my what y'all are seeing here. Yeah, okay. On the screen there. Just making sure that the right here, this chat box. This shows you the chat from from Twitch and from YouTube all together there for you guys. So sometimes you guys say that you don't know what I'm talking about because you don't see it on your end because you're in one platform or the other. This allows you to see it from both there. So anyway, guys, yeah, jump in while you can. Join us at howtotradetowin.com. We'd love to have you there. Be sure you're hitting these links up here and following us. We started posting to Instagram today, so make sure you're following us there. Make sure you're following us up here on Twitter. Make sure you're following us on YouTube, Twitch, Facebook. We've had an issue with Facebook that we haven't been able to get figured out yet with that we're locked out of that account with Facebook, and of course they're not so helpful. Still waiting to get a response for them, but as soon as we can, we'll be posting regularly there on Facebook as well. So if you're on there, go ahead and follow us there. Just trying to make sure that we're everywhere you guys are, so that way you're not forced to join some other social media thing that you may not want to join to see us. By the way, we're going to have some contests coming up for memberships and whatnot. So whether you're a member or you're not a member yet, you'll have a chance to enter those as well. I'll give you a hint. One of them has to do with memes. So if you believe you are meme worthy, you might be preparing for that. But anyway, yeah, so great. But in the meantime, come join us, guys. We'd absolutely love to have you there. If you're a follower of Scott Melker and you get his newsletter, there was a link in there. At the end of that link is a code. Use that code. Just come to this page here, go to the Join Us, or scroll down to the bottom and enter where the descriptions are of the different tiers there. Enter the tier 3. Choose the 1 month option, and then just enter that code that's at the end of that link into the coupon box there. And should have no problems at all. If you guys are doing that and you're having an issue with it, of course you can contact us. We'll be glad to help you out with that. We've got email up here. If you're on Discord on our server there, you can join in there. By the way, if you want a quick link to our server, you can just jump in right here on this one right here. Just hit this Discord thing here, and that'll pull you right in there. So lots of easy ways to get there. We'd love to have you there, guys. Lots of education. And I think that's probably the greatest thing what we do. But we also run a daily, almost 20 assets every day. We update daily and intraday. We're going to get those all going to intraday. There's only a few really that don't do intraday right now. Within the next week or two, they'll all be intraday as well. And we're going to start adding more. So we're going to, I'm hoping to have eventually up there to about 40 or 50 daily updates as far as the as far as those intraday updates go for different assets across all the, right now we do gold and silver, natural gas and oil, and we do the Aussie against the dollar, we do the euro against the dollar, we do the dollar against the yen for the forex, we do the if you're tier 3 there, of course you get to see the dollar against the Canadian dollar as well, against the loonie there. We do a lot of crypto. We do BCH USD, USDT. We do BNB USDT, BCH USD, I guess. We do Link. We do Litecoin. We do Ethereum. We do Tezos. We do Ripple, XRP. Not Ripple, XRP. So we do a whole bunch of other ones as well in there, guys. And then we do, right now, we do 3 of the indexes. We do NASDAQ, we do the S&P E-minis, and then we do the Dow Jones as well. So almost all those are Tier 2. But, right now we've got Tier 1 and Tiers 2 closed off to new members at the moment. The only way you're getting in with us right now is Tier 3. So make sure you jump on it, guys. Anyway, there you go. We'd love to have you there. We have a lot of fun, a lot of great information going on there, guys. And you might be surprised that some of the people you follow, some of the accounts you follow online are actually in there with us. So let me see here. Who's here? Hank saying both streams are working perfectly. Glad to hear it. Hey there, Kevin. Good to see you. Satoshi's evil sister. Makes me laugh every time. Glad to have you here. Corn 1000. Happy Friday, my friend. Onyx King, what's going on, buddy? Says, I have no social media, so no problems there. Well, I can't do anything if you don't have any social media. But if you do, we've got multiple places for you guys to check in. Baker, what's going on, bud? Yeah, Hank, unfortunately, some people still use Facebook, so it is what it is. Got to make sure we're there. It's not a very friendly platform for, I'm finding out, for businesses. At least not for our type of business, unfortunately. I don't know. Maybe we can find some kind of workaround in it, but it just seems like they're just a pain in the rear end. Let me see here. Casper, what's going on? Alonzo, what's up, man? Good to see you. Let me see here. Spiral Architects here. Sean's here. Good to see you guys. Zet checking in, of course. I'm doing great. Great to have you here. LG, the beard is looking voluptuous today. I appreciate that. Yeah, I'm really enjoying it this time around. You guys know usually it gets a bit longer here, and I kind of shave it down. Don't actually ever go bald-faced, but I get a shadow of some sort on there. I'm enjoying it right now. So winter coming up. This thing might get, who knows how long this thing will get by the time I decide to finally shave it there. Oh, man. Suckalamink, what's going on? Good to see you. All right, guys, let's go ahead and jump in here and see where we're at. All right, so Bitcoin. Last night, BMA evening update for our Discord members. We were, gosh, I don't even remember. I think we were right around here, weren't we? And I said, okay, I was looking at potentially getting a move up here to this supply structure. But I also said, but you know what? The 38.2 might be as far as we get, and that's it. And sure enough, that was as far as we went, and we went down. So, again, if you were in Discord last night, there was the signal to go down. We're down here. What is that about? Not a whole lot there. What is that, about 100? I don't know. 150 or so dollars down, maybe, the movement so far. And then we're getting this thing right here at the 15-minute pivot. We're getting this bit of this local trading range going on here. Basically, what I'm looking at now is, do we advance above the swing high here, or do we decline below the swing low? That's what I'm looking at. If we're advancing above the swing high, that sets a target up here of this, basically this EQ up here, right here around 10,780, 10,790 kind of area, around the EQ of this supply structure. And so, that sets up that move up there. And of course, if we go above that swing high, I would then look up here around the R1 pivot, the 15-minute R1 pivot at 10,960 or so, as the initial target on that coming up out of there. And of course, that means then we'd have to, recount this here. I discussed with the Discord that there's potentially, maybe a 1, 2, 3, 4 here. It's not as clean as this ABC, but it is there potentially. So not a big surprise if it were to bounce here and head up. It is on the pivot. Potential double bottom thing going on. Now, I'll be honest with you. The only thing I don't like, this doesn't have to be a double bottom to continue up. But what I don't like about it, if it is this long drop here afterward. Usually double bottoms are pretty clean, meaning that they'll go up and they won't decline almost to the invalidation level. Usually they'll just continue going up here. So, and this is only potentially a double bottom, even if it was. It has to get above this swing high in order to confirm it. So don't get all excited about that. But if it does get above that swing high, I'd be looking up here, watching to see does it go above this swing high up here or not. If I count it, if I zoom in and count it, I can get a 1, 2, 1, 2 here. Maybe get a 1, 2, 1, 2, 1, 2. But I'm not sold on that. But, this deep decline rate, I mean, that makes a good possible A, B, C up here. Now, if this is a 1, 2, 1, 2, 1, 2 kind of thing here, I would expect a pretty sharp decline right through here as it gets on down here. So we'll see. We'll see. I'm not saying it's definitely going to go down or not. I'm saying I can count it as such. But really just looking at this trading range right here, do we pop up or do we pop down? If we pop down, initial area is going to be right around this 10,460, 10,470, 10,480 kind of area. And then looking at it getting down here to around 10,395 to 10,415 as it's coming down there. And that's just the local 15-minute move down there. Now, the one thing is, on the 15-minute, it is a shorter time frame. So, OBV, as I warned you guys, if you're using it as something other than the daily, you've always got to be a bit more cautious with it. It seems to work best on a daily. 15-minute is so short a time frame that this may or may not be misleading. But right now, it does look like there's buying by the bigger money. So now we definitely need to see, do we get follow through with this? But just because this is going up, because it's a 15-minute, doesn't mean it's necessarily going to lead up. It's such a short time frame. And remember, the reason why I tell you about the short time frames, guys, what I warn you about them, is that there's a lot of noise. And the noise is just this up and down, this overlapping price action. And that's why this can be thrown off here on these shorter, looks at it. So we do need to be cautious about a short because this is making higher highs and we're nearing this invalidation level here. But if we're dropping below that swing low, that should have us going down here. And, depending on how long it takes to get down here, these 15-minute pivots will stay here till the end of the day. So that's going to be another 7.5 hours or so. And so if it gets on down here before that, I mean, we should expect a bounce down here around this S1 pivot. If I take everything else away and I just look at this right here, guys, I'm trading pivots. If we lose this swing low right here, there's no reason I'm not looking to this S1 here. I'm looking at other things as far as minimum wave counts and go whatever, but forget that. Just look at this right here. If this drops down below your swing lows here, you should be targeting this on the Binance here. It is right there around 10,352 or so. You should be targeting that. Now, obviously, you don't want to try to catch that very lowest price because if price gets front run right here in this little bit of activity, well, you're kind of SOL, right? So it's always good to kind of pull a little bit of profit, to pull your profit right prior to that target. At least that's the way I trade, guys, and it does me well. I may miss a little bit on the back end, but I am not concerned about it because I locked in all this on the front end. So I mean, again, just looking at pivots. That's exactly what I looked there. Now, if we jump over here to the 1 hour, we're sitting here between the pivot and the S1. How's what I look at this? We bounced through here. We pushed up through the S1, but we're finding resistance at the pivot. So again, looking at that swing high locally, we've got this range here, and if we pop out of this range, we're looking at this swing high. So if you get above that swing high, that then opens up the possibility that we're running up to the R1 up here. Now, these are the 1 hour and 4 hour pivots are basically just almost exactly the same. And they close off at the end of the day on Sunday. They are, they run for the entire week. So, we've still got time to go on this here. But there's a lot of overlapping activity. There's a lot of supply in this area, which is why you see this higher volume node popping out here. So you've actually got to make it through this area here before you even get up there. But if you do, that should probably be your target there. And that gives you then that 11,330 kind of area. And then things potentially look a bit more bullish, but realistically, guys, again, we've talked about it before. If this is a 1, 2, 3, 4, 5, then it's possible this could be an A, this could be a B, and then this is a C going up here. And in that case, if this is a 1 and this is a 2 or an A and a B, I might be looking right up here around this R2. Why? The 11,735. Why there? Because that large the large high volume node there. If we look at fib retracements on that, that would give us then, oh, I've already got it on there. Okay. That gives us my favorite number there. That's 70.5 retracement. Now that's just a little bit lower there at 11,687, but it's that general range right there is where I'd really be looking. If price were to push above that, I'm going to start looking a lot more at price being more bullish and heading up to a new higher high. Now, all that could mean is this is 4 and we've got 5 coming up, which means if that's it, it'll probably test the June highs right there, that 13,000, 14,000 range, and then pull back for a wave 2. And that wave 2 is going to pull it back down there towards 7,000. So either way, I don't think you're off to the races from this area. Now, I mean, there's other accounts that are potentially more bullish. But until that happens, right now anyway, I think we're more likely to pull back, whether it be here or up there, at those June 2019 swing highs, rather than running up to 18 or 20,000 before pulling back. But we'll see how that plays out there. Let me see here. Hey there, Pixafan. Good to see you checking in. Let's see. Alexander, what's going on, man? Am I discussing traditional markets today? I sure am. Can I look at the cubes on the weekly? Sure. Yeah. If I don't remember to do it, remind me to do it. But I'll do my best to remember to. Yeah, I'll definitely do it. Hey there, Alex Wagner. Good to see you checking in. But yeah, so I mean, guys, basically the reality of it is this is all sideways. You may not like this large range here from 9,800 to 12,500, but the market doesn't care what you do or don't like, right? The reality of it, this is the range. Locally, we've got a range here from 9,800 to 11,200. That's still a range. So we're still sideways locally. We're still sideways wider here as well. So you're going to get a lot of possibilities. Don't let it upset you that, that realistically people aren't saying, oh yeah, it's definitely going up or going down. Now you're going to have people that are very emotional and they need it to go up and they're going to say, oh yeah, it's definitely going up. But they're hoping more than anything, guys. And if they, or you know what, if they really believe that in their guarantee, then you shouldn't be listening to them anyway. Because I'll tell you what right now, serious traders, ones that are going to be in the market 5-10 years out from now, they won't guarantee you that price is going to do anything. They'll say, listen, it looks like it's going here because of this, this, and this, but here's my invalidation level, and if it's going the other way, then we'll be looking at these targets. If the person you're following is not saying that, really question who you're following. See, so that's why Scott's great, man, to follow. If you guys aren't following, follow him. Scott Melker on Twitter there, because he gets out there and he says, listen, we're looking at this here, and if it goes through here, then I'm looking at this. But he doesn't ever get out there and say, oh, it's definitely going up. And people, I think people get confused about that because they often, get a hold of me like, oh, well, your buddy Scott over there, your mentee Scott says something opposite of what you say. Well, first of all, understanding what's going on in the market and how it's doing, it doesn't mean you're going to come to necessarily the same results in your process when you're thinking. All right? That again, people like to say that charts give you probabilities. They don't. They just give you possibilities. When you consider them in your head and you start looking at it and you say, okay, we're looking at this, and we're adding on all these different things, then you're providing a probability for yourself. But the charts themselves just give you possibilities. All right? So be careful with that out there, guys. I know it may seem like just a semantic thing, but it's really not. It's really not. It's really important that you understand the difference in that. Let me see here. As far as the 1 hour goes, popping up out of oversold here on Stochh RSI. RSI is in a downtrend from that overbought, but we don't see a consistent level of higher lows yet, lower lows and lower highs. We've got this one here. We've got a high, we've got a low, we've got a lower high, we've got a lower low. We may have a higher high, but we have to wait till we get a lower low to confirm that. So we do have a downward trend right now, but not convincing enough for me, I guess, right now to say that, that we're definitely, I would never say we're definitely doing something anyway, but to say that, to feel overtly strongly that we're going down. I think things say we're going down, but until it breaks down through that range, I think you're just kind of really taking on more risk than you have to. And and that's the thing, guys. If you're trading, you should be looking to limit your risk as much as possible, but still be able to be profitable. You're looking for that. You're looking for that sweet spot between risk tolerance, risk aversion, and your trades, so that you are consistently profitable. That's what you're looking for. You're not looking, guys. If you are out there looking to sell the absolute highest price or to buy the absolute lowest price, you're not going to be doing this for very long. I promise you. And you're going to be, while you're going to continue adding more money from your account. You're going to continue sending in more money from your bank. So, again, the key is to develop a system that allows you to consistently lock in some sort of profit. But, again, we always talk about the psychology of it, because people in general, traders in general, new traders especially, retail traders are very, they want to get rich tomorrow. I mean, that's the whole idea why you're jumping into the crypto market, right? You saw how well it did many of y'all saw how well it did at the end of 2017. You're like, oh my gosh, I can get rich overnight, right? But most of the time, the market doesn't move like that. Most of the time, it does what it's been doing here. And that is difficult for people to deal with, especially if they come in just seeing that very, that very apex of bullishness. So you can definitely be successful, guys. You can definitely make a lot of money trading, but you have to be realistic in the way you do it. I have people tell me, don't be so pessimistic. I'm not pessimistic. I'm just looking at the charts and saying, listen, if I look at the charts, it says likely this or this, or possibly this or this. But those of you that follow me, even here on the public live streams, I still say, okay, even though overall, big picture, I'm looking at potentially doing this, there are invalidation levels along the way that could create these other accounts that we've talked about over months now. And that's the way you should be trading, guys. But most of crypto Twitter is very much, and I want you to be careful of this, is very much just emotionally one way or the other. And you don't want to be that way. Let me see here. Let me see here. Let me see here. I can't see who that name is. It's in purple on this blue background, and it's killing me. But maybe it was, oh gosh, I don't know. Maybe that's Data. Oh, that is Data. Okay. It says the power of collaboration is having more ideas as a group compared to what you come up on your own. Yeah. That's a great thing about what we do with Discord. Maybe you're new and maybe you don't know of all the ways that you could possibly be looking at the chart. So you get into Discord and you start seeing this great conversations, great discussions going on by our members, who mutual respect amongst our members. It's fantastic. And a lot of times, maybe half the members or more don't agree with me. And that's okay, because I'm not here to force my opinion on anybody. I'm here to give my opinion and to explain why it's there. But really, at the end of the day, that whole thing is just to get you guys to understand more and more how things relate. You can have the same understanding of how price action relates and what's going on and still come out to a different result, and that's fine. Because at the end of the day, you're the one trading your stack, right? You're the one trading, whether it's crypto, whether it's Forex, whether it's stocks, whether it's commodities. You're the one trading your account. It's you are ultimately the one that is responsible for whether you lose or win. And the sooner you accept that and you're okay with that, the easier and quicker you'll be able to move on and to correct what you did wrong previously if you lost, and move on to making more consistent, profitable trades. As long as you constantly believe it's somebody else's fault, it'll do in your mind, it'll create this mental block, and you'll never be able to get beyond that. You'll always be stuck on that. So as a trader, you can't possibly grow. I've been doing this 25 plus years. I'm still growing today, guys. That's what it's all about. The day in anything, the day you believe you know more than anybody about it is the day you start falling behind. So don't ever do that. Always look for, more information, different ways of looking at things, whatnot. Whatever you're doing, not just trading. Alex, what's going on? He says, just joined, really digging it so far. Just set up a paper account on 3 commas to get my feet wet. Oh, just joined the Discord. Well, that's awesome, man. We're excited to have you there. Like I said, lots of information, lots of content there you'll see in there. Let me see here. Clarkman, what's going on? He says, how come the DXY is pumping hard and there are assets going up like the SPX and BTC? Because they don't move at every second opposite each other. Remember, what you're looking for is your overall trend. You're looking for what is the DXY doing overall and what is your other asset doing overall. Because in times, for instance, if the DXY is going sideways, then price can go up or down with whatever you're looking at. If you're nearing a, and again, it depends on the time frame. Other things to think about, if you're nearing a potential reversal point with the DXY, some assets may get to their reversals quicker. Remember, they don't all correlate at the exact same time and in the exact same place. They're all different assets. Money moves in and out of them, guys. So gold and stock market and Bitcoin, oil, whatever you're going to look at, they all have their own, local differences that are going on. So they're not all going to be in correlation. Now, when you have a squeeze of liquidity, then basically everything drops and the DXY pops all at once. Kind of like what we saw back there at the end of February, beginning of March. But other than that, yeah, it's not always going to be correlated like you're looking at it. But I think that's what people are trying to look for is, oh man, well, it's not moving today. It's not moving in different directions, so there's no correlation there. Well, that's just the wrong way of looking at it. Remember, the DXY is the dollar against a basket of currencies. Basket of 6 currencies, I believe. The euro makes up the largest of that basket at about 58%. It's a weighted basket. So the euro, what's going on with the euro contributes 58% to that basket of currencies value against the dollar. So there's always going to be bits of moving in and out of that and running with that. So yeah. Let me see here. Cody's thinking hit 1750 and a great long from there. I don't know what you mean by a great long. If you mean new higher highs, I don't think so. Again, the way we've got it continues looking down. Matter of fact, let me pull this out here. Something I posted this morning, talking with Hank. So here's the thing, guys. If you think gold is bullish, it has to be bullish off the lows here in 2015, coming to 2016, okay? My problem with that is that if we look at this, if we drop in here, this is the 3-day, and we count it, it appears to me that we've got a pretty clear ABC. Not only do we have a pretty clear ABC, but then, to me, it seems like we've got a pretty clear triangle here as well, a bunch of ABCs. So A, B, C, D, E. It's possible you could go, okay, it's a leading diagonal, and so you get an ABC for 1, and then you have a 2, and then you have an ABC for 3, and then you have a 4, an ABC for 5, right? And so that would be fine off of this, but then you've got this right here. And I've been looking at it, and I really can't find a better count. I mean, anywhere close to a better count, or even a count that's similar with significance as this is here. And so here's the thing. If we're starting off as an ABC, and then the next move is a triangle, I mean, that's corrective. This is not bullish because you can't have a triangle as a wave 2. Triangles are your move before your last move. So they're wave 4s, Bs, Xs. So, I mean, if we look at it there, I don't know how you get bullish off that. Now, people will say bullish because they'll look up here and they'll say, look at this move here. Well, I mean, again, I've got this as a W X, Y, X, Z here. And of the Z, we've got a W, X is a triangle here, and then a Y to finish that up there. As an A, B, and then 1, 2, 3, 4, 5. So, I mean, if I look at it, it doesn't really work for me here. So we zoom out here to this, and that brings us back to the idea that, very possible that we're doing this expanded flat idea here, which means it should be coming here below 900. Around 900 or so, maybe. I mean, the EQ of this zone right here, of this demand structure, is here at 840 or so. What is that? About 840 or so. Now, I'm not saying it has to come all the way down there, but I think you're looking at least around $1,000. And I'm not guaranteeing that this count is correct. I'm just telling you, man. I've looked at this so many times because I want to make sure that if I'm saying this is it, then I want to make sure that it really makes sense. And it does. So if you wonder why, everybody say I'm so bearish. I'm not bearish. I'm just reading the chart. That's all. My personal opinion isn't bearish otherwise. Now, if we then take into account other things that are possibly going on and we jump here to the DXY, oh, look at that beauty. That thing's going up there. Let me zoom out a bit here. And so if we look at this, and if we say, okay, well, bottom here, we're heading up. Well, then we should expect, at least initially, for gold to drop off. Because the dollar rising like this is deflationary. The dollar gains more in value, so the things that you purchase decline in value in general. I mean, there's always, everything's got a little specifics there, which is why I said Bitcoin might be the one asset that I would expect to either buck against the DXY rising, and it could still rise, or at least maybe break out of that decline sooner than everything else. So be the first one out of the gate on the reversal, maybe. But nonetheless, I mean, however you want to look at this, is the daily. We pushed up through the pivot, hit the R1, retested the pivot as support. We're pushing up. Pivots tell you we're bullish, guys. I mean, y'all can argue all you want, but if you're trading pivots, that's bullish. I mean, this is the epitome of bullishness here on pivots. If you, again, if we look at counts here, I know I've got all these smaller counts in here. Unfortunately, I don't have one that's just on the right time frame there. But, again, we've got this. If we look at this Elliott Wave coming down, and if that's correct, then the move up here above where wave 4 here triangle terminated, and eventually it even went above where the high of wave 4 was, that should confirm that the bottom's in. If you trade channels right here, you've got however you want to look at it, touch at the top, touch at the bottom, touch at the top, touch at the bottom. And now we got rejected right there, pulled back, and now we're popping out through it. That gives you a pattern target here of about 98.90 based on the height of the channel. But if you really want to be sure, I think you get above this zone right here, this blue zone that I've been talking about. Now we're above the EQ of that, so again, there's more significance in this potentially being bullish. But if you absolutely positively need even more support, I think you wait for, you look for a break above 95.45. And so, this is kind of where we're at the moment. Now, can I guarantee that any of this is what I just said? No. Nobody can guarantee it, guys. There are no guarantees in trading. That's why trading is called speculation. If you look at the definition of speculation, it means without guarantee. So if that's the case, if you can't guarantee what's going to happen, what do you have to do as a trader to remain successful over the long term? You have to protect yourself. How do you protect yourself? Proper risk management. But it's the one step that most new traders completely ignore, or they never really spend the time to learn how to do it properly and then apply it consistently. And then they wonder why their accounts are dropping down. So then it gets to the easy thing, which is, oh, it's Wall Street. Oh, the whales are manipulating me and stealing my money. Oh, it's wash trading on the exchanges. All that's just a bunch of it's just a bunch of excuses, guys. None of that has anything to do with your overall profitability. I promise you. If you are using your risk management properly, then that stuff does not mean that you're going to be unprofitable. And if it doesn't mean that you're necessarily going to be unprofitable, then it's a non-issue. So at the end of the day, it all comes down to, are you doing what you need to do as a trader to make sure that you can be as successful as you can possibly be? And if you are not serious about your risk management, if you don't spend more time developing your risk management strategy than the rest of this, then you're doing it wrong. Today, I still work on my risk management, guys. 25 years. I still work on it. Because the goal is always that you want to get your risk management to the point that you lose just enough money to get to that point where you're wrong in the trade. You don't want to have to give back more money than you have to, even with your risk management there. So you should always be working on refining it to get those better and better stop losses. On that right there. What's going on, Othman? Good to see you. Let me see here. Jordan, what's going on, man? Let me see here. Alex, you're very welcome, sir. Hey, Data, I appreciate the color change, man. Yeah, I can see it a little bit better on there. Let me see here. Jordan says, I'm missing out if I still haven't watched Stephen Van Meter yet. He just did an interview recently with Britt Johnson for Real Vision. Should check it out if you get some time this weekend. Yeah, thanks for the heads up. I think I saw Raul Paul saying something about that. He was talking to somebody else. Somehow I caught that conversation, and he mentioned something about deflation being wage deflation. Yeah, like I said, guys, there's a lot. You have to understand. Everybody says, okay, well, the Fed's going to save us. The Feds, they're putting all this money out there, so they're in control. There's no way the markets can do A, B, or C, right? The problem is nobody has a handle on exactly how this whole inflation deflation thing works, guys. Not the Fed, nobody else. And you say, oh, you're just saying that. No, Powell said that a few weeks back with his comments. He said that. I've talked about it before. He said, listen, guys, what we thought we knew about deflation doesn't seem to be correct. What we thought we were going on doesn't seem to be correct because it hasn't been happening that way. We had this record unemployment for 2 years, down to these ridiculously low levels. We should have had inflation, and we're not getting it the way they measure it. Now, we're always talking about inflation the way they measure it, guys. I'm not here to, to discuss the realities of inflation, and food prices going up and all these things. I'm just talking about the way the government measures it, because all that matters when it comes to policy is how the government views it, because they are going to act and react based on the way that they view it. Not the way that you view it, not on what's possibly more correct. The government's only going to do it on what they believe is how you're measuring this. The problem with that is a lot of their government numbers are manipulated in a way so that it's more political. So they can say, oh, look, these numbers say this, so we need more money to go here or more money to go there. And so, that's the reality of what we're looking at on there. Let me see here. Othman, if we're looking at this right here on the hourly, my main count right now says ABC, but as I mentioned earlier in the broadcast here, there is a possible count I think you can get here where you get a 1, 2, 3, 4, and you get a 5 up, and if that's the case, that would get you a 5 right here around 10,928, based on the 61.8 extension that we usually look for a wave 5. Locally, we want to make sure, does it break above or break down? Does it break out of this the trading range here, or does it break down from the trading range? If it breaks down, you should be looking down here, at that 10,380 kind of level. Where's that 15-minute pivot at? Potentially down here at 10,352. Because as you can see, that's that 15-minute pivot right there. If you're going up, you got that 10.9 whatever there. Along the way, you've got the 15-minute R1 pivot right here at around 10.956. So, yeah. Let me see here. Matt says a lot of stocks look like they're done. Do you mean like Tesla filling that gap before more downside? Okay, so you mean, done done with the upside? Yeah, I mean, that's what I'm seeing as well. For those of you that don't know, one of the things that we do is our tier 3, they get these things called hot takes, which are basically multi-class tradable opportunities that we put out Sunday, Tuesday, and Thursday evenings. And so we put out trade charts that we're watching there as far as possible movement goes, for tradable opportunities there for stocks, Forex, and crypto. And so what that means is, forget the rest of the week, because also what you get is tier 3 is you get to request charts. So I'm usually doing multiple chart requests a day across all those different assets. And of course, commodities and whatnot. But on Tuesdays, Thursdays, and Fridays, or Tuesday, Thursdays, and Sunday, I'm looking at no less than probably 50 to 100 stocks. And I'm not, and what they're saying overall is a lot of tops, it looks like. I mean, just me going through it. It's nothing very scientific or whatever. It's just me going through so many different stocks multiple times a week. It looks like any kind of reversal at this point for most of them is going to be basically a pullback. Now, here's the thing, guys. Just because we look at the indexes dropping, so the stock markets in general dropping, that doesn't mean all your stocks will drop. Some stocks are going to rise. Some stocks are going to drop afterward. Again, kind of like we talked about gold and precious metals and Bitcoin and the stock market in relation to the DXY, and why are they kind of rising at the same moment right this second? It's the same idea with the stock market itself. All the index says is, that index is dropping, which means overall the market's not healthy. But there are individual stocks that still do well. If we look back at 2000, after the financial crisis there in 2008, I believe it was Dollar General that was doing really well. Now, each recessionary period that we go through is different. The types of stocks that did well after the dot-com bubble, in that recessionary period after that, were different than the stocks that did well during the 2008 recessionary period there, 2009, which are likely going to be somewhat different potentially than what we're going to get this time, because each bubble up to this point has been different. Your 2001 was your tech bubble. Your 2008 was your financial bubble. This one right now, if this is doing what I expect it to be doing, this is the big one. This is the credit bubble. This is everything. We're at the point where people say, you know what? I can't keep taking out credit. I'm not going to keep doing it. I'm going to pay it down. I'm not going to go out and seek new credit. And there's the problem. Now we don't have, extra money being created, extra credit being created. And that's where you get that deflationary issue from. In general, at least that's the way I've viewed it for a while, for quite a long time. Now, does that mean I'm necessarily going to be right? Nah, I could be wrong. Sure. Because like I said earlier, absolutely nobody knows for sure everything there is to know about inflation and deflation and all these things. You got to think, man, you've got some of the most intelligent people in the world working at the Fed. You've got people in there that they bring in just to look at the opposite. That's their job. So if the Fed says, listen, we're looking to do this, this, and this, it's the job of this other person to look at that and go, well, if you do that, it's likely to cause this, 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 and this. They literally have that person there. But, if you have this group of some of the most intelligent people in the world directing monetary policy here, and they're not able to guarantee what works, what doesn't, and why things are working and why they aren't, then don't feel so bad if you don't either. But I think there are some things until proven wrong that we can continue to go with. And so, right now, if we're talking about credit, if we're just being real basic about it, guys, here in the U.S. and many westernized world, rather large countries, we're debt-based, which means we have to have continued growth of debt to fuel progress, to fuel our growth. And any slowdown of that is detrimental to our economy because our economy depends on the overspending and the overproduction. So when you get to periods like we're at now, where banks are tightening their lending standards, people in general are just not going out for credit. And on top of that, the people are paying off their credit. And on top of that, people are at the highest points of savings that they've ever been historically. That is all anti what we need for the bubble to continue to expand. And that's what we're kind of looking at right now. I think on an overall bigger thing. Now, all these other little things everybody talks about, and of course we talk about the yield curve now, and that's the big thing. Interest rates, all these things. They're all attempts to control that bigger picture. But at the end of the day, it's not that you have to understand all that. All you have to understand is if credit is not expanding, if people are not out there spending, then with a debt-based economy, if you're standing still, it's the same thing as going backwards. It pulls down the economy just because of the way that's designed there. So that's why I kind of think where we are there. Let me see here. Let me catch up with you guys here. Sorry. Let me see. Hey there, George. Good to see you. How about SPX and NSDQ? So the NASDAQ and the SPX here. Yeah, we're going to look at that here. Let's go ahead and pull that up as a matter of fact. We got the E-minis right here. This count may or may not be completely correct right here. Basically, what we're looking for is limited upside. If we get an advance through this descending resistance, it's likely just to see this, just a pullback on a move up here before further down. Right now, I've got this wave 3 target. God, I don't know why these things are sticking at the moment. I'm going to have to reset this chart here. Nothing's locked on here. But I've got this wave 3 target right down here around 3,000, I don't know, 3,060 or something like that. 3,067, I think, is about where it's at. And so we'll see if this continues to play out here as it is here. If this is a 1 and then we've got an A, a B, and a C as a flat here, running flat, we could have a 1, 2, 3, 4, 5 finishing up maybe coming on down here. But ultimately what we're looking at, guys, is just further downside. I don't see anything that says we should be snapping on up anytime soon. If we jump on over here at the NASDAQ, let's see here, NASDAQ. What do I got here? This chart starts over here. NASDAQ, same idea. Right now we've dropped through the pivot. I mean, if you're only if you just look here on the daily on the pivots, we've declined through the pivot, the S1, pushed back up, dropped below the S1. We should be looking to target the S2. That's just pivots. Ultimately what we're looking for to increase our confidence and further downside is a decline below this wave 4 swing low here, which is 10,313.94. And we'll get even more confidence if we decline before this larger wave 4 here, this exterior wave 4 at 94.99 and 10 cents. So those are our targets as we're moving down. You getting below those increase the likelihood that we're going to, that this is the top up here and we're continuing down. Daily still hasn't hit oversold here. Again, I think if you're looking at the indexes, I think more or less your pullbacks are basically selling shorting opportunities right now. As long as we remain below this, below that all-time high there, that's what they should be. Now, as we continue to get down here, and develop a wave, a larger wave 2 and then a pullback, then we can move that down. Instead of up at the very top, move it down to that one. But for right now, there's nothing spectacular going on with anything here. Again, pullback should just be used to sell or short as it's going down there. Let me see. Let me throw in the cubes here real quick while I'm thinking about it. Since somebody was asking there, I can't remember. Was that you, Alexander, maybe? Asking about that? I can't remember. I'm sorry. Oh, you were looking at the weekly, weren't you? Cubes, again, not looking good here. Same idea. Same idea. What we're looking at with the indexes there. Weekly. So weekly's dropped down and oversold here, but with Stoke RSI, not bottomed out yet though, but RSI itself still really, really high here, 59.95. It's in a downtrend, but what we're looking for is, we've got a high here, we've got a low, and we're looking for a lower high and then a lower low to confirm that to kind of continue what's going down here. You've got this large bearish divergence that we had here, which set the tone for the down move there. Let me see here. Yeah, coming off here from basically back over here, January of this year to here. So to see that bearish divergence over this large a movement up and this large a time frame suggests that we should get lower down than this here. Doesn't make any sense to just bounce right here. Not saying it can't, but again, everything else into consideration, we got lower down. Other ways to look at it is usually volatility is negative for the markets. Usually that means you've got price declining. And with everything that's going on here in the U.S. Socially, you've got the Sandra Day O'Connor died, or was it Sandra Day? Not her. RBG, Ruth Bader Ginsburg, died from the Supreme Court there. Trump threatening to throw in somebody real quick here. That's affected a lot of people. We had the Breonna case that no officers were charged directly with her murder. So you've got more protests and riots breaking out across the U.S. This has been a constant theme for all of 2020 here. We've got the election coming up. And I'm going to be honest with you guys, man. I don't think we're better off with either one of them in the office. But we've got that. And so you've got people, you've got them very much divided for Democrat versus Republican. And then you've got Trump has his own camp as well. And then as far as the Democrats go, not only you have Democrats, but then you have this AOC and what's his name? God, Bernie Sanders there. The very socialist, really strong socialist type of leaning for that. And so you've got all this social disorder and whatnot going on. I don't see that ending anytime. We got COVID going on. And now we're talking about, second outbreaks, which I discussed with you earlier in the year. I said we're going to have likely a second wave coming in the fall. And so we're starting to see some of that showing up in other places. You're hearing about over there in Great Britain and what they're going to do over there potentially. And who knows with the U.S. what we're going to do, right? And so, now you've got this second stimulus bill coming out, coronavirus stimulus bill. That not that they've actually it's coming out right yet or anything, but they're back in there working on it again. But honestly, with us being this close to election, I don't see it getting passed before the election. So I think all of this, remember guys, I keep talking about what you see here is just a reflection of this social mood of what's going on around us. And all that going on tells me that we're probably going to be volatile through the end of the year. And with markets, if you're volatile again, that usually means prices headed down. And so, that's my overall kind of idea of what we're kind of looking at as far as the year progresses. As we look at what's going on socially and all these other things that are going on there. And I am in no way, guys, taking a position on any of this. I'm just saying that these are the things out there that are going on. And so your market, what you see on the market is a reflection of how people in society feel. News reports on it afterward. The Fed responds to it, but the Fed doesn't direct it. The Fed is always responding. It's always responding. Even when it says it's leading, it's always responding to what's going on. Because here's the thing. If the economy does what the Fed would like it to do, then there's nothing for the Fed to do, right? Only when the economy doesn't do that does the Fed come and do something. So the Fed is always reactionary. Always reactionary. So the idea that the Fed makes the market do this and that and controls whatever is nonsense if you think about it. Let me see here. Excuse me. Hank says, for the conviction that the DXY will rise, you also need a macro argument why the euro would inflate. Currently, the euro finished a period of deflation. I see the USD and euro switching sides for a while, but not a long-term change. Yeah, that's what I see. Yeah, exactly. I mean, that's the other side of it, Again, because the euro makes up 58.6% of the basket of currencies that the dollar's compared against, they're weighted against. And we know that the eurozone over there, they're pretty. The central bank there and everything's pretty adamant about not wanting increased inflation over there. I don't know. But again, even with the DXY, that's just one part of it. Now it's a big part of it, and that's why it's significantly important. But it's not the only part of it. So we'll see how things are going on here, as they continue to go on there, what's going on. Who's going to hit negative rates first? The U.S. or Eurozone over there? I would guess the Eurozone, but, I'll probably be wrong on that. Not because, because the DXY has any reason, or the U.S. has any reason to hit negative rates first, but just because I came out here and said it, so that's why I'll probably be wrong. Let me see here. Oh, let me catch up with you guys here. Oh my gosh. Okay, I've got to really I'm just going to scroll down here and see if I can catch up with you guys are saying toward the end here. Why is it such a big deal about the USD, guys? Again, the same thing I've been talking to you about. Because worldwide, more debt is denominated internationally in dollars than anything else. All right, that's the first thing. Second thing, of course, the dollar's place as a reserve currency. Whether you believe it's going to remain that or not is irrelevant, because right now it is remaining. And so if you say, oh well, I think the USD is going to drop because it's not going to stay a reserve currency, well, you're saying that to get to your position, you're sidestepping things that have to happen first. I think if we look at the way it's sitting right now, this is the way we look. Look at where the U.S. in terms of, petrodollar, all these things. And so, when you look at where does it go, well, we talk about global liquidity, right? By the way, guys, hey, listen, I just got a new book, by the way, in case you guys want to check it out as well. It's called Capital Wars, The Rise of Global Liquidity. It's by Michael J. Howell, right there. So I'm going to start reading this one. It looks pretty interesting. Again, we're talking about liquidity and whatever. At the end of the day, it's all about liquidity, guys. And if things in general are measured in dollars, have to be paid in dollars, etc., then guess what happens? If something happens, even worldwide, where we get this big worldwide kind of type of recession, depression thing going on, well, the most likely thing to happen is people are going to go to the dollar because they still have to pay their debt. And the debt they have to pay is going to have to be paid in dollars. Period. So if you're ignoring that for whatever your particular bias may be for the euro or against the dollar, or whatever it happens to be, and of course I'm not talking about just Hank, specifically or anything. I'm just saying, when we bring up these points about what's going on, I mean, you have to absolutely look at that. That's a big thing of that's a big part of what's going on there. But people tend to ignore these types of things. And I don't think that they ignore them because they want to. I think they ignore them because they don't understand how they work. This is why we had what happened with the dollar back in March. February, March. Again, liquidity crunch there. If everybody's going for the dollars and people are not spending those dollars and they're kind of sitting and no more credits being created, guess what's going on, guys? The dollar has to become more expensive because there's less of it out there. It drives up the price. It drives up the value. So, we'll see. Again, these are bigger, more macro ideas. But this is the reality overall of the situation. Now you can sit in there and look at all the little things along the way, but if you're just looking at those little things and completely ignoring what the big picture is, I think, you end up setting yourself up to potentially be really, really confused, when things happen opposite of the way that you expect them to. Let me see here. Let's see here. I'm kind of catch up with you guys. Let me see here. Crypto Monopoly says debt isn't getting cut. What debt isn't getting cut? If you're talking about personal and corporate debt, it's actually, decreasing. Well, personal debt definitely is decreasing. I haven't looked at the latest numbers yet this week or last week. As far as we're looking, maybe corporate debt and stuff like that. But I know that most recently, personal debt has definitely been decreasing. The last thing I read about corporate debt was that we had a lot of it being paid off. Now, here's the other problem. With the pandemic, they're looking at 60% of the companies that went out of business due to COVID this first time around are not coming back. They're gone for good. So if we look at a second wave of COVID coming in, and whether, again, I'm not here to discuss with you guys whether you believe it's this bad thing or not. I'm just saying it all that matters is what government views of it, because then government policy comes out and what they're going to do. And they're necessarily, I'm sure, going to make it more difficult for businesses to do business. And if you do that and more businesses go out, guess what? If businesses are going out, that creates bankruptcy. Bankruptcy means the value of things now, are getting, that changes the value of things. It changes the dollars that are out there and what's going on. All of a sudden you're closing out debt. Remember, if you're going through bankruptcy, and not just reorganization, I'm talking about clear up bankruptcy, you're done, it's done, right? Well, that debt is now gone. So again, you're removing debt at that point. Let me see here. Yeah, exactly, Hank. Debt decrease is a big problem because the U.S. economy is based on debt. Exactly. But, so are most large economies now. They're pretty much all good at that point, where it's all about, because what they found out is that if you continue to expand your credit, you can continue to produce and consume beyond normal rational levels. And as long as you can continue to do that, it keeps building. Well, when you no longer do that, all of a sudden, things come in close, close in. And when things close in, all that fake growth, and it's really fake growth, guys, because it's based on this overconsumption, production idea. And so then the system ends up cleansing itself, and people, businesses go out of business, people lose their jobs, more unemployed, people can't pay mortgages, they can't pay their rent, whether it's personal or whether it's corporate. And all that, the economy itself just continues to shrink. And the government's going to step in and try and spend more and more in it. But, it's fine as long as people believe that the economy is going to be okay and going to continue on. But as long as people don't believe that, they're not going to get out there and spend in whatever more. Spend and overproduce and whatever. Companies aren't going to continue to overproduce if they don't have people buying. Why are they going to do that? So they have a whole bunch of supply on hand? That wouldn't do anything good for them, right? Let me see here. Do I think let me see, who's this? Carlos, what's going on, man? Carlos Big Connect 123, I like that. Do you think the housing market will crash too because of people having to liquidate their assets? Yeah. I think here's the thing, guys. If this is what it appears to be, which is a credit bubble, just the overall credit bubble, everything is going to go down because credit affects everything. And that's what we should be, other than the dollar. The dollar will go up. But, along this whole thing. Now, I've done this very high overview of what things kind of mean and how it kind of all works together for you guys here. It's a lot more intricate than all this, but in general, that's what goes on. And so if it does, yeah, everything should take a hit. But now, will things come back? Sure they will. They always do. Will they come back at the same time? No. No, because as I alluded to at the beginning there, we were talking about other things rising versus the DXY, who was also rising, and why there's no, opposite there with the correlation. When things are going through this whole process, some things will bottom faster than others, and they'll make their way out of it. But at first, everything goes down. At first, everything does, especially when there's that liquidity. And so again, I think we get basically deflationary bust. Right now, I'm thinking we're going to get stagflation, and then we might get inflation. I think that would be the way to. I don't think we would hit deflation and straight up into inflation. I think we're going to get a period of stagflation there in it. Let me see here. Let me see here. Onyx King says, when you push the economy rubber band too much, it will snap back hard. Yeah. Things can only go so far, guys. There's always, it's that idea that for every action, there's an equal and opposite reaction, right? So you can only continue pushing up so far. This is what we were talking about with the NASDAQ. Remember, I was talking about how the NASDAQ was the only thing really pulling up all the markets? And the NASDAQ itself was moving up on fewer and fewer companies. Its breadth was shrinking. And so what that meant was, well, as soon as one or two of them took a hit, NASDAQ's going to drop, and the NASDAQ's going to drop, and everything else is going to continue to drop, right? And that's what we've got going on. That's what happened. Same idea, yeah, across anything as far as the economy goes, sure. Hey there, Darius. He says stock crash October or November. What do you mean a stock crash? I think we're in a decline. I think we're headed down. I think we've got a pullback coming up here pretty soon, maybe. A decent little pullback, but I think that's all it's going to be. I think it's just going to be a pullback, and then we'd go down further coming up. Let me see here. Let me see here. Casper says they're no economists, but they find it strange that during this entire period in South Africa, I believe it's South Africa, right? At present, we have seen a massive drop in rentals, yet record increase in successful applications of new home loans. Yeah, I don't know anything about that over there. I haven't looked at it, so I honestly don't have an answer on that. But, even if we eventually look at some kind of worldwide depression kind of thing going on, or recession kind of thing, again, the countries are going to get into that at different periods. They're not all going to drop at the same time, right? Again, I've told you for the last year now, I said, the ones that are going to get hurt the worst are going to be those emerging economies. So that's one place to look at who's really going to get hurt. And that's going to just be an issue that, they've got to pay their debts, and lack of access to dollars, and, and having to, pay for expensive dollars is going to cause a lot of them to go into default. And if you go into default and you can't pay, again, we're looking at the whole idea of bankruptcy. This whole idea that if you can't pay your debt, and finally they write it off, guess what? No more debt. And that affects that whole debt-based system negatively. Because, again, you need expanding debt to continue to push up what's going on. So, yeah. Carlos, you're welcome, man. Sure. Oh, hey. Thanks for answering my question. Do you think Robert Kiyosaki messed up by buying assets? Oh, I was going to actually talk about that. You'll see right here. Let me see here. Right here. I actually have this set up here to talk about. So if you guys follow Kiyosaki, now I'm a big fan of his in general, guys, because I'm going to tell you, again, coming as somebody who didn't come from money, coming as somebody who's had to work for everything I have, his books, guys, it's completely true. The way you look at money and assets and things is completely different if you come from a blue collar or a poor background compared to what wealthy individuals come out, which is why, the wealthy do so well with, what am I trying to say? Sorry, I just lost my train of thought there. Oh, why they end up doing so well off? Why the wealth gap gets bigger with QE? It's whoever gets. It's where does the money go first? They're the ones that are going to benefit from QE. So asset holders, right? So anyway, he says here. You remember if you've been following him, last few months, he keeps talking about buy gold, buy Bitcoin, blah blah blah, and he says too much uncertainty, asset markets crashing, COVID-19 flaring, economy horrible, election war, Supreme Court. Basically saying the same thing I said. Dangerous time in world history. Do not do what I did. I bought gold, silver, and Bitcoin yesterday. Hold cash. Be smarter. Be patient. Worst yet to come. Take care. And I agree. I agree. Now, that doesn't mean these things won't go up in value at some point. But it means right now I think the safest thing to hold is cash. Now, you can trade these things and you can make more cash as they decline, shorting them and whatnot. You can do that. But I think cash is definitely a good place to be overall. Especially if you're not a skilled trader or whatnot, or even somebody's in there trying to trade. I think if you're just everyday average Joe or average Joe investor, I think you really you need the cash on hand, because that cash is going to become more expensive the more that demand comes in there and the more uncertainty comes up with all that. So yeah, that's what I'm kind of looking at there as far as that goes. Let me see here. Okay, so let me get a couple more here. Let me see here. We've got gold. Well, let's look at silver here real quick. Those of you that follow me, I've got this silver target here of sub $8. Same thinking basically as gold. But here we go with what we're looking at here. It's possible this could be an interior 1, 2, 3, 4, 5 of 3. So this could be 1, 2, 3, A, B, C is a 4, and then we get a 5 lower down here. So you're going to look for a rejection right around this 24.17. If you get a rejection there, that means this is interior. This again is a 1, 2, 3, 4, 5. So this is a 1, 2, 3, 4. And you'll have 5 looking down here, maybe 21, 25 or so. And that's what I'm looking here at this time. Overall, you can see here, this is the 4 hour. You can see that you're getting strong selling going on still. OBV here. But, again, bigger picture on silver. This is kind of what we're looking at here. I'm looking at potentially down here $5 and some change. Getting down here, but at least down below $8, I'm thinking. Again, you had gold getting a higher high over this same period, but you have silver making a lower high. Gold goes up when silver leads. Historically, if silver's leading, if silver makes a higher high and then gold makes a higher high, then gold's going to continue up. Historically, I've said this so many times before, when silver makes a lower high and gold makes a higher high, that's usually just corrective, and we should expect gold to pull on back down. So again, seeing where all this comes together, same thing we look at there. Nothing's changed on that. So we already talked about gold there. We've got what we got here? We got natural gas. So natural gas has got this pull here. Right now I'm looking at a possible. Now I've got this possible 4 up here, but then again, this could be a 1, 2. 5 could have ended down here. I'm not sure yet. I want to see, does it get up through this area? So locally anyway, we've got a 1, 2, 3. It looks like a 4. We should be looking for a 5 up here around 24.46 at least to get you a wave 1 off this low down here. And then we'll look for a pullback and further up. So that's kind of where I am with natural gas right now. And of course, oil. Oil, man. Oil just being kind of crazy here. Almost invalidated this count. For right now, the count remains what it is. We need a decline below this swing low right here, the red, to kind of signal, okay, maybe this top might be in with a decline below this swing low right here, really kind of setting it up and saying, yeah, it really is That's 38.87. Want to get a little below that. If we get a push up through this, basically that just suggests right now that wave 2 is not complete yet. And we may see a move up here toward the 78.6 at 41.11. Maybe even this 85 here for at 41.30. If price were to continue to push up through this swing high, well, then we'd have to be looking at the possibility that this B wave is not complete yet. So we've got this 1 or this A here, and then what would be a B here. So maybe A, B, and then C working up. Again, potentially the 78.6 at 42.13, or even that 85.4 there at 42.66. As long as we're dropping below this red line, next target's that swing low. If we're getting below that, we should be good to go lower down toward at least the top of this range here at about $36 for a wave 3. Wave 5 looking to hit the EQ down here about 35.18. So that's kind of where I'm looking in there for that. Let me see here. So, I mean, at the end of the day, guys, we kind of look at this and we do the best we can with the information we have, guys, and we try and figure out what may be happening. But even, it's important to always have a bigger outlook along with your short time frame trading. That way it helps. If you think something's going on short term, you can kind of zoom out a bit and go, okay, well, is that really maybe happening or not? And you kind of, again, you create those probabilities, and then that allows you to trade more effectively. Anything else, guys, you're really just asking to lose money. So you got to be careful out there. Pixafin, have a great weekend, my friend. Take care. Take care. So anyway, guys, I mean, that's kind of where we're at. I don't really have anything else to add to that. This should get us into the next week there. Like I said, be sure you're joining us. We would absolutely love to have you guys, seriously. Join us here at howtotradetowin.com. Also, be sure you're following us on these various social media platforms. Help us grow our base there. Like I said, we're going to put on some contests, give away some free access, stuff like that. So make sure you are following, so whatever kind of platform we put it on, you guys hear about it, and you can take advantage of that. Like I said, if you get Scott's newsletter, he has that free newsletter, Wolf's Den. He's got a free and paid version. There was a code that went out on this week's free version. So if you're not signed up, guys, jump in there, sign up for it, and find that code. You can download the previous version, which came out this week. And it's at the end of that. The code is at the end of the link. And if you have any issue with that at all, contact me. I'll definitely direct you on how to do that. You can get me, you can get us up here at contact@texaswestcapital.com, and, people will be able to help you there. Or if you're on our Discord server, you can just DM me directly on there, and I'll be able to give you that code, that code right out. And you just add that in the coupon box, and you can get 50% off, guys, of your first month of Tier 3. So check it out there. That's it, guys. That'll do it, though. I hope you guys have an amazing weekend. I really do appreciate you guys continuing to check in with me. I appreciate the fact that we've got discussion here, and not just a bunch of nonsense people coming in and getting, all butthurt with their feelings and being emotional responses. I really appreciate that, guys, because, I come from a very academic background. Discussion is the name of the game, guys, when you're, at your master's level and higher in education. And that's what I'm looking for. I don't promise to guarantee that I know what's going to happen, but, I'm here to definitely share what I think and why and how I understand things to be. And so if you're coming from a background that's not as diverse or as much in depth as mine is, it gives you a place to at least start with. And maybe you go look at what other people are thinking, other thinkers, other people that have a lot of education in this area as well. And maybe it's different than me. And you say, well, I hear what Chris is saying, but I think I'm following with this one more. That's fine. That's fine. I just hope I give you guys at least something to consider more than the simple little memes that go out there. Because I think if you're trading based on those memes, it's really going to set you up to get, to just get slapped around pretty bad there in the markets. All right. So, that's it, guys. That'll do you. We'd love to see you over in Discord. If you all in Discord, of course, I'll see you there today. If you guys aren't, I want everybody just to have a fantastic weekend. Join us on Monday at 11 a.m. Central Standard Time. We'll take a look at what Bitcoin did over the weekend. Maybe I'll start titling those Monday shows What Bitcoin Did. And we'll take a look at that. And we'll look at the dollar as well. You guys have a great time. Be safe out there. Be kind. If you get a chance, say something, do something nice for somebody that you don't know. And stop taking advantage of the people that you do know. Just because, their family or long-time, relationships, friendships, or whatever, doesn't mean we can dump on them all the time. Right? Everybody's kind of dealing with everything that's going on worldwide right now. Some places locally it's a little bit more difficult to deal with than other places. Always keep that in mind. All right? Give people a little bit of slack. That said, don't forget, man. The only thing you control in the markets is how much you lose. So it's all about the risk management, guys. Take care, and we'll see y'all on Monday.